Hi there, welcome to Polygon Wyckoff technical analysis session. So last week we talked about Polygon is being suppressed under the key resistance level, and this week it happens in a way that it's challenging that key level, always floating around that price level. So let's see what actually happened and how close we are, like basically Polygon, in terms of breaking out above this key level. So while Polygon has exhibited very different behavior from a lot of other altcoins, it basically dropped below the long-term playground zone. So it is an area where since 2021, the price has not reached such a low point. So a lot of people are very disappointed about this price behavior. So yeah, that's the reality. But then if we look at the price actions recently, it's very actively challenging this key resistance level of 20 is not 27 cents, yeah, roughly around that. So we're very close to that price level. This is actually the bottom edge of the long-term playground zone. So if it reclaims that level, that's something very significant, because it once again returns to somewhere close to the bottom of the previous cycles. So the best is it reclaims to above the red key level of 0.43 and then started trading there. Even trading there horizontally, that still means it's getting back to somewhere near to the level of end 2024 to January this year. So while it's still not the best case scenario, or a bit sad for the long-term supporters of Polygon, it's a first step, a good sign that it's kind of recovering, maybe getting more confidence from more people, or the old supporters coming back in. That's still a good sign. Currently it's still early, but then these signs are showing. If I switch on the Bollinger Band and corner squeeze indicator, you see the previous squeeze hasn't really got its pressure or the power released yet, because we don't see a big move, and then the price start to come back down to the current level. I would consider the squeeze is still happening. Even the indicator, the shade, this vertical shade, isn't showing up right now for these 3 weeks candle. But since the purple lines are close enough and one of them is actually within the orange, I would consider a squeeze is happening. In terms of volume, it isn't too bad. The red bars are getting lower and lower, so as it looks like there's less selling pressure. So if it continues to trade lateral range sideways, then the squeeze will eventually happen again. And when that happens, we know a bigger price swing, a bigger price swing is near. So when this swing happens, then is the chance where it can shake away from this resistance level and go up to challenge the red, the 0.43 level. In terms of Wyckoff, I'm still keeping 95% towards the upside at the time being, while we retain a little bit over there as a test coming down, because we know it can happen even of the sign of strength. The price can come down for another test to shake out some of the people that got in early, and then it started to launch. So it's basically test of the test by the whales to see how the small fishes behave. So remember, the key of this is, even if we are extremely positive about what's going to come, always have that in mind, that it can go to the other side. So you have to adjust accordingly for your orders. Then in the weekly, after the weekly, we come to the daily chart. This looks like a backup last point of support period. This platform stage over here, if I highlight it, you see this platform stage. So the price climbed above and traded sideways to form another platform range. However, it returns to below the center line of this upward channel box. So this blue box over here, we have this center line. Previously it pops up and trade again on the upper half of this box, and then now it returns to the lower half, but then it isn't over yet. So previously in end July something similar happened, and in 2 days it quickly reclimbed to above the center line. So the best case scenario is for it to come up, return to above this center line, as well as this white line we already covered in the very beginning, the bottom edge of the long-term playground zone. When that happens and it continues to close above this white line, that's a first positive indication that sufficient support is already there, and then that's the foundation of the price going to the distribution cycle. It's really testing the patience of everybody, but then we're getting very, very close. So one indicator or one indication over here is this upward channel box, assuming even if the price is going to trade below the center line of the box and also below the white resistance line, eventually it will come into this triangle. So this ascending triangle over here, the deadline is December 5th, so still a bit of time, 2.5 months from now, but then we are getting closer and closer. So it can continue, the price can continue to test this white support resistance line, and then eventually do a real breakout when we get into November. So yeah, it may be still having some horizontal trading activities, small wings over there, but eventually when we get closer to early December, the breakout will eventually happen, even if it really trades under or around the white line from now till then for 4 months. So it can do something like this, hit the upward like ascending support line and then bounce up, or even like more frequently this way. Eventually near the end of November, early December, it's going to break out, and by then we can tell whether it's going to give us another test, or is it really going to a new distribution cycle and show us that Polygon is still in play. Better, it challenged the center line of the long-term playground zone, meaning above the key level of 70 cents. So if you are a diamond hand for Polygon, if you're a diehard supporter, I wish you good luck. Hope that happens in that way, that we see a new distribution cycle all the way to those two levels. That's all for Polygon for now. See you in the next